Equities buoyed, dollar exhausted at the end of the year. In choppy trading on Tuesday, Wall Street stocks fell from fresh all-time highs as investors engaged in profit-taking. The legislation that would increase the payments to $2,000 faced uncertainty in Republican-controlled Senate after Majority Leader Mitch McConnell blocked the vote in the upper house. On the data front, the S&P Case-Shiller Home Price Index for October rose 7.9%, the fastest pace in 6 years. As a result, the S&P 500 fell 0.22%, the Dow Jones also dropped 0.22%, and the tech-heavy Nasdaq slid 0.4%. Asian markets were mixed on Wednesday, with Japan's Nikkei 225 retreating from a 30-year high, while stocks in Hong Kong, Seoul, and Shanghai rose. Hong Kong's Hang Seng jumped 2.18%, the Shanghai Composite Index in China gained 1.05%, and the South Korea's Kospi added 1.88%. Japan's Nikkei share average lost 0.45% on its last trading day of 2020. In Europe, equities turned positive after a flat to lower opening, as investors have already digested a deal between the UK and the EU. The Pan-European Stock 600 index climbed 0.13% at the time of writing. London's FTSE 100 index gained 0.19% after the coronavirus vaccine developed by the University of Oxford and AstraZeneca was authorized for emergency use in the UK. AstraZeneca said the vaccine had been approved for use for emergency supply to battle a new variant of the virus. The Pan-European Stock 600, which rose to a 10th-month high on Tuesday, rose 0.13% during the first hour of the session. Meanwhile, the dollar kept losing ground versus most counterparts, with the euro-US dollar climbing to fresh April 2018 highs above 1.2270 before retreating slightly on Tuesday. Today, the euro extended the rally to levels just below 1.2300. US dollar weakness remains the main factor driving the common currency higher. Upbeat market moods sent the dollar index to fresh lows below the 90.00 handle amid relatively fresh and thin liquidity conditions. In the longer term, the euro-US dollar could add to gains amid the economic recovery from the pandemic crisis and the Federal Reserve's dovish monetary policy. In other markets, oil prices continued to tread water in a tight trading range above the $50 key handle on Tuesday. Brent crude gained modestly, but failed to challenge the $52 barrier as traders turned cautious in thin trading conditions. On the positive side, the futures continue to hold above the ascending 20 DMA that has been acting as support for nearly 2 months already, suggesting that the prices could extend the ascent at the start of 2021 if the OPEC plus countries refrain from further rise in crude oil production. The developments surrounding the coronavirus pandemic will matter for the oil market as well. In the short term, Brent could retreat marginally amid profit-taking ahead of New Year's holiday. Despite dollar weakness, gold prices struggled to see more robust gains and edged lower during the early European session. The prevalent upbeat market mood is seen as a key factor in weighing on the safe haven metal, with already strong global risk sentiment getting an additional boost after UK regulators approved the use of the AstraZeneca Oxford coronavirus vaccine. Furthermore, the risk-on environment is being supported by growing bets on a strong global economic recovery in 2021 amid additional US financial aid amid the coronavirus pandemic. On the other hand, the heavily off-red tone surrounding the US dollar might help limit deeper losses for the bullion. Gold prices were rejected by the $1,900 handle along with the 100 DMA earlier this week and have been struggling since then. In the short term, the metal needs to stay above the $1,870 handle in order to avoid deeper losses. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.